Valentine's Day?
Let's hope so. Let's hope we make it through with the power and internet connectivity and everything else here.
Yeah, I know. My lights are flashing, so.
Yeah, I'm watching things like in The Wizard of Oz fly down the street, so it's a little nuts. I'm only a block away from the beach, so the wind is even worse down here.
Wow.
But let's kind of tell people why we're here, what's going on, and hopefully start a little bit with you, to hear a little bit about you. So,
Sure.
as we talked about, we want to give people just a general overview of the difference between forbearance and deferment, and then maybe talk a little bit in detail about what some of those things are. So we've received about 10 or 12 questions, and there's a lot of commonality between the questions, so it sounds like a lot of people have some of the same questions. So why don't you tell us a little bit about you? I know you, and a lot of people that are on my Facebook page know you, but why don't you introduce yourself and give us an idea of how long you've been in the industry?
Sure, Helen. So I currently work for Fairway Independent Mortgage out of Hingham. I've been with Fairway now a year and a few months. Prior to Fairway, I worked at Mass Housing for 31 years. And prior to that, I was back in the mortgage business working for a couple of other different companies. So I have over 35 years of mortgage experience in different arenas of the mortgage business, predominantly in the sales end of things. But I did spend a few years at Mass Housing in the foreclosure and REO department. So I do have a little bit of background there that I think is helping me help people through this crisis that we're experiencing right now with forbearance being a big word.
Really important. Like yourself, I haven't been in it 31 years, but I lived through that time of forbearance and foreclosures and modifications and short sales and the whole thing. And I don't think we're going to come to that point. I think we are going to have some people that are going to have some difficulties, but I don't want to scare people. That's not what either you or I seeing coming in the future. But
not at all.
Fallout. Let's not sugarcoat things. There will be some people that will have extenuating circumstances that might not be the best.
Right. I mean, this is tough times for everyone in many different ways. For people where they're experiencing financial difficulty, it's great that we have the CARES Act and the things that it brings along. But I think today what we're trying to do is create awareness so that people who may need to take advantage of some of the features that are around their mortgage with forbearance will know how to do it and do it with education behind them to make a smart decision. So I think that's the goal here today.
Absolutely.
So, and I couldn't agree with you more. I belong to a lot of different networking groups, as well as financial groups. MBS Highway is a big one with Barry Habib that I'm on every single solitary day. And I really do believe that the real estate market is going to carry us out of this. When we start to come out, when I say come out, when we start to go back to the real world and living like we were before, I think when people go back to work, we're going to start to see as unemployment starts to diminish or starts to go down again, we'll see that the mortgage market and the real estate market carry us out of it.
Sure. And the circumstances around that, that time period back in the early 2000s was very different. That was a longer, kind of more protracted period of time. There were a lot more of the behind the scenes in the mortgage industry things that caused some of this problem. This is
exactly.
While we all feel like we've been in our house for a million years, it's short term. This is short term.
Right.
And I think that's what people have to remember. Not only for the housing market in general, which was not, really where we were going to go today. We will later in the week, but not for today. And the reason I wanted to make sure that people understand that it's very different from before being a short period of time is that you're making decisions that are short-term decisions. We're not talking about things that are, decisions that are going to have ramifications for years should you make an informed decision.
Right. So there's under the CARES Act, there's a section that refers to mortgage forbearance, and I'd really like to start with that.
Sure.
I think the best way, I think you shared one of the posts that I had posted about some of the foreclosure math around it, or the forbearance math around what is going on. So I'm just going to give that example to help people understand.
It was a great example.
Yeah, so it wasn't my example. It was another example from a fellow teammate at Fairway, but I think it's a great example. So mom and dad have a mortgage. They're paying $1,500 a month. Dad gets laid off. He calls his servicer. That's important, and we'll talk about that. He calls his servicer and he asks for forbearance. He's current on his mortgage at that time. That's also very important for anyone that's thinking of going into forbearance. Calls the servicer and he gets 6 months of forbearance, so he doesn't have to pay his mortgage for 6 months. 7 months later, Dad's finally back to work, but he hasn't been able to save a lot of money. He wasn't making any money, and he hasn't been able to save any money. So he calls the servicer again and says, I'm back to work, and I'd like to start paying back what I owe. The servicer at that point says, okay, you currently owe $9,000 for 6 months at $1,500, and your current payment, which is another $1,500, so $10,500. And Dad almost passes out because he realizes all of a sudden he owes that money. The servicer says to him, well, that money's due and payable now, so before you can move forward, we need to collect that money. He's like, I don't have that kind of money. What do I do? And the servicer says, well, we can spread that out over 12 months. So he owes $9,000, and over 12 months, that's an additional $750. So his $1,500 payment plus the $750 brings his payment up to $2,250 a month. He says, oh my God, I still can't afford that. I'm just trying to get back on my feet. I still have other bills. I can't afford that. What can I do? So that's what we want you to be aware of. That is what forbearance is, and that's what you need to be aware of right now. So forbearance that you're hearing about with the CARES Act is a great option to take advantage of. If you have no other way of paying your mortgage. But if you do take advantage of it and you can possibly try and make payments, I would highly recommend that you try and do that. So what happens next? When you do go back to work and let's talk about what the forbearance period is. So most people are given a 90-day period for forbearance, or right now, actually, you can go up to 180 days, and then you can request another 180 days. So you could be in forbearance for up to a year, 90 days, 6 months, whatever the case might be. But the average person nowadays, I think, is looking for a 6-month forbearance period. You have to request that. You formally have to call your servicer and request that. Let's talk about lender, servicer, investor, because so many people are so confused. We know those terms because we talk them all the time, and I'm the worst because having worked for Mass Housing, everything was an acronym. But what is your lender? Your lender is your front end, whether it be a bank, a mortgage company, a mortgage broker. That's who originally gave you the money for the loan. That loan for in most situations, unless it's a bank, that loan is usually backed by Fannie Mae, Freddie Mac, or it could be a government loan. That's when you hear the backer of those loans, whether it be Fannie, Freddie, or a government loan. It could be that you applied directly with a small hometown bank and they're holding that loan. So they too could be the servicer of your loan. But for the most part, about 80% of the business out there nowadays is sold to a servicer by the lender. And we're going to talk a little bit about that on Wednesday night. But for now, it's important. You make your mortgage payment to your servicer. For anyone that's brand new, that just closed on a mortgage and they don't know who their servicer is, pick up the phone and call your lender. They should be able to help you. We just sent my business partner, I'm part of the Smith Moriarty home team at Fairway. My business partner and I just sent out a letter last week to all of our customers explaining how to reach out to their servicer, and if they couldn't get a hold of their servicer, to call us and we would work through that. So some new clients may not know how to do that yet, or may not even know who their servicer is. They should reach out to their lender. Once you reach out to your servicer, expect that you're going to be on the phone for a while. They are getting hundreds and hundreds of calls. Some of them may have a service where they'll put you into a loop, just like when you call the airlines, and they'll say, we'll call you back in the order that you called in at, but be prepared for a wait. If you can't get through to them, don't stop paying your mortgage.
No.
Because if you just stop paying your mortgage, you're not going to be eligible for the formal forbearance plan that's available out there.
Maureen, you just mentioned that we're used to some of the acronyms, we're used to some of the terms. Would you mind if we did this a little bit differently? If I ask the questions, and the reason I want to do that is I want to put it in the words of the people that had the questions.
Absolutely.
So I think that might help because they'll hear their question and say, okay,
Perfect.
this is what I meant. Because, we talked about the government loans, we talked about services and that kind of thing. Many people don't know that what the servicer actually is. You gave a great explanation. And we mentioned government loans, Fannie Mae, Freddie Mac. Most of the consumers are used to the term FHA. So
Right.
they may not know if it's Fannie Mae or Freddie Mac so let's run through the questions just so people can hear it in their own
Perfect.
voice, and then we'll go from there.
Absolutely.
If you don't mind, I'm sorry.
No, not at all.
Okay. So the first question we have is, what if I'm not back to work by the end of the forbearance?
So if you're not back, when you say the end of the forbearance, so you could be approved initially, as I mentioned, for a 90 or 180-day forbearance. If you need to extend that, you are entitled to get another 180 days if there's a hardship. You need to make that request again.
Okay.
If at the end of that period you're not back to work, you have four steps that will happen. The first thing is they're going to look for you to reinstate your loan. And that means you're going to have to pay all past due amounts. The next thing will be, if you can't do that, then you may be looking at a repayment plan, working out some kind of repayment plan over a 12-month period with your servicer, who will have to get that approved by the investor, whether it be FHA or Fannie Mae or Freddie Mac or whoever's holding your loan. So that would be a repayment plan. That would be the next step. If you can't afford that payment plan, there's a lump sum payoff that could be added to the end of your mortgage. In the case of a FHA loan, so you talked about FHA loans, there's something called there's two things that could happen on a Fannie Mae or a Freddie Mac loan. So most of your conventional loan products or a mass housing loan, you'll be given the ability to pay off 2 months of delinquent payments in a lump sum at the end, but no more than that. So that you'll have to at that point make another decision to go on for a modification.
So if I'm behind, say at my initial whatever the initial time period is, say it's 3 months or 6 months, and then I go and get an extension of that. I request the extension of that forbearance period.
Correct.
So now, let's be blunt. Now I'm in the whole 6 months.
Mhm.
So the way I understood it is you're saying that I might have the option to come up with a partial payment.
So on a conventional
Sort
loan,
of.
they don't usually like to take a partial payment. So it's a lump sum payoff. And if you can't do a lump sum payoff, but there's an exception to that with FHA. So we'll talk about that
What
separately.
about 2 months that you just mentioned? So what did you say about 2 months?
So no more than 2 months delinquent. You can't be more than 2 months delinquent at that
So
point.
if I'm 6 months behind, I have to come up with 4 months worth of mortgage payments.
Then you're
And
going to move.
are they charging me interest and penalties?
So they have not charged you interest and penalties at that point, because that's part of the government
Forbearance program.
assistance under the CARES Act. Yep.
Okay.
But at that point, you'd have to move on to a modification with your lender on a conventional loan.
So
On
I'm
an
6 months
FHA,
behind, I'm gonna come up with 4 months worth of payments, and then I may be able to add those 2 months that I'm still behind onto the back end of my loan,
yes.
potentially?
Yep.
Okay.
So it'll
Okay.
be up to the servicer. It's completely up to you working out a plan with your servicer.
Right.
On an FHA loan, what they will do, and this won't be added onto your loan, they're going to put 12 months. FHA will pay your servicer for 12 months of payments, and they'll put what's called a secretary's lien. So the secretary of HUD, so your FHA HUD loan, they'll put what's called a secretary lien. And when you pay off on your loan, so whenever you sell, refinance, etc., whenever you pay off, you'll be paying off of that secretary's lien that was placed behind your mortgage.
So the payoff that I get from the bank is gonna show one amount, and then I'm gonna have the separate amount, which is the secretary's lien?
Correct.
Okay.
On an FHA loan
On an
only.
FHA loan. Yep.
Yep.
Okay. Okay.
So most people, when they get to that lump sum payoff, they can't afford to pay off their lump sum that they owe.
Right.
So they're going to have to move on to what's called, on a conventional loan, a modification with the lender.
Okay.
So that's what they will do, because they can't make a partial payment.
Right.
At that point, they're not going to let them continue to make partial payments.
Okay.
So
So
at that,
bounce back and forth, unfortunately, just the way the questions are. So the next, let's skip. So the next question I have is, how long is forbearance? I saw in the news it could be extended a few times. Is this automatic? So I think you just answered those questions. It's not automatic. You do have to request from your servicer. And you're gonna have the initial period that's offered by your bank, and it's kind of covered under some of the CARES Act stuff. And then there's the potential to get an extension on that, but I have to ask for that again. Is that part of the federal government's rules? So if I qualify or whatever the case may be, am I automatically going to get that second forbearance period if
I believe, Helen, that you will automatically get that once you've made the request for that.
Okay.
You're not having to prove hardship nowadays.
Yeah.
It's just that you're telling them that you're out of work or whatever your situation. There's not a lot of proof in the pudding right now, if you want to put it that way. It's important. But one thing that is really important about all of this is they're not reporting anything negative during this time frame. They're not reporting negative on your credit. But if you are negative when you go into this, so for the FHA loan, if you're negative, you're paying late more than 30 days on a loan, that you're not going to get that waiver of them not reporting. So if you go into this and you've already been late on your mortgage, there's no waiver of them not reporting.
Okay,
you have to be current on your mortgage when you go into this. So as of March 1st for an FHA loan, and I believe it was as of the date for conventional loans, but I would say just March 1st in general, you can't be late on your loan.
So if I was late prior to this starting, and I get into trouble, I lose my job, my income is decreased, whatever the case may be, I can still do the forbearance, but I am gonna have the negative, credit reporting.
Correct.
Okay. Now, one of the people that I had spoken
And
to.
that's really going to be, if you're already late, that's going to be up to your servicer to determine whether you can do that or not. I'm pretty sure that most of them will approve it, but they are going to continue to report you late because you had that 30, 60, or 90-day late already.
Okay, so if I go into it and I'm on time with my payments, wasn't having a problem before this started, then I should not see a non-payment or late. Am I going to see non-payment? What am I going to see?
So you will not be reported as late. What will be a problem is if at the end of that you decide, well, I want to refinance my home, we are going to know that you had a forbearance there, that you weren't paying. And if you're in forbearance, you cannot refinance on conventional financing as of right now. Again, all of this is moving. I mean, things could change, things could loosen up on this. But as of right now, no one is going to be able to refinance you if you're in forbearance currently.
And I think that's an important thing for people to know, because I had spoken to a client 2 weeks ago, and they said to me, I spoke to my bank and they told me that I'm going to be reported as not paying my payment, but it's going to have like kind of an addendum that says I'm in a forbearance. So I will be reported as not paying, but there'll be some kind of an addendum. So let's say we get 6-9 months out from here. I was in an initial 3-month forbearance period, got my act together, went back to work. I'm making the money to pay my mortgage payment. I'm paying it. And now we're in December and I want to refinance my mortgage. I'm up to date. I went through say a 3-month forbearance period, got everything back on track, and now we're in December and I want to refi.
At that point, if you've paid everything up to date and you're current, we can move forward.
Perfect. Okay.
As long as your credit's still good. Yep.
Okay.
Yep.
So like I said, the questions we've partially answered them, but again, just to hear it in that person's voice. So we answered, will this hurt my credit? How long is forbearance? How about, we talked about a servicer. So how can we make this as plain as possible? So when I got my mortgage, it said, no, I'm not going to use that one. I hate them. But so what it said, I don't know, Bank of Canton.
Right.
I got my loan through Bank of Canton. No, they're not a good example.
Well,
they are. Okay. So when I got my loan, I got it through Bank of Canton. And now 3 months later, I'm paying my mortgage to somebody else. Who's my lender?
So your lender is Bank of Canton, and your servicer is that someone else. So let's say that's U.S. Bank.
Okay, perfect.
All right.
Okay. So people will know the difference between who their original bank was and who their servicer was, because typically they get a notification from the servicer saying, we are now servicing your loan.
Correct.
Make payments here.
Right.
Okay. All right.
And if they didn't get that notice, they're probably paying to the original person that they got their loan from, or the original entity. So.
Yep. So if they haven't,
and that's their servicer.
Perfect. Okay. All right. Next question. I bought my house a long time ago. How do I find out if I have a government-backed mortgage?
So if you don't know, you can ask your servicer. It does not show up. I've looked at several mortgage statements. It does not show up on most mortgage statements. So you don't usually find it on your mortgage statement. So you have to call your servicer. Or the other thing you can do is Fannie Mae. So FANNIEMAE
Mhm.
You can do a Google search of Fannie Mae property lookup, and you can see whether your loan or your loan lookup, whether your loan as the owner of the property was sold to Fannie Mae. You can do the same thing with Freddie Mac, FREDDIEMAC,
Okay.
and see if your loan was sold to them. If it wasn't sold to one of them, it was probably an FHA loan. You would likely know if you had a rural housing loan or a VA loan. But the predominant ones that you want to look for is FHA versus conventional.
Okay. So I have those two. I have three lookup tools, really, right? I can look up Fannie Mae. I can look up Freddie Mac. If I have a VA loan, odds are I know I have a VA loan.
Right.
And then FHA. There's an FHA lookup for me to see if my loan's an
So
FHA.
there's no FHA lookup.
Okay.
So that's when you'd have to find that out from your servicer, or if you're still in contact with your lender, which I hope that if you've had your loan in the last 10 years, you still have some contact with your lender.
Okay.
And you could reach out to them and say, what kind of loan did I originally have?
Perfect. So, and I think that's important because just a couple of minutes ago, you were talking about the difference between Fannie Mae, Freddie Mac, FHA, and a conventional loan. So there's slightly different rules for government-backed loans versus conventional.
Yes, there are different rules for government loans versus conventional.
Okay, perfect.
And the biggest difference is in the modification process is when you get to that lump sum payoff, how it's handled.
Okay,
So that's the big difference.
perfect. So we touched on the other. We've actually kind of touched on all of them, so not all of
Yeah.
them. Somebody had asked, will banks accept a partial payment? So I don't necessarily want to do a forbearance, or I haven't even thought about deferred payments yet. But if I can pay half of my mortgage payment, can I, or should I, or do we know?
So every entity that services your loan or your original lender, in the case if you're paying to your original lenders and they're now servicing your loan, it would be up to them to make that decision. You need to reach out to your servicer. Reach
Okay.
out to your and again, what we're telling you today, there could be some other modification or there could be a CARES Act too that
Right.
changes the way these things are looked at. We don't know how long this is going to go on. We hope that we're coming out of it, but things could change.
So the next question is, what is a modification, and am I better off trying for that?
So a modification is going to be the last step in this whole process, really. So you're going to go through the forbearance plan, where you're not being reported as late and you're not making your payments. At some point, you're going to have to look to reinstate your loan, and they're going to ask you, can you come up with a repayment plan? Can we do it over 12 months? Can we do it over 6 months? Maybe during your forbearance, you were, trying to make payments, so you made some payments during that, and you only have 3 months of payments, and you feel over 6 months you might be able to pay that back. So that would be your repayment plan. Then there's the lump sum payoff. Is there a way for you to do that or not? You might be able to do that with the FHA loan with the secretary's lien.
Mhm.
But on a conventional loan, you're probably going to go to modification at that point, and you're going to actually modify your mortgage in the way in which you pay off that lump sum. So they might extend the term. They might. There's all different options at that point on how the modification could look. It'll be modifying the original terms of the mortgage.
Yep. Yep. And again, those of us that came through the early 2000s, we remember modifications pretty well. It was an interesting time period. And when we get to one of the last question, actually, I think we're going to touch back on those 2000s again with just some kind of helpful hints a little bit. So the next question, question number 8. My parents are asking about a reverse mortgage. Could this help them?
So, a lot of people are asking about reverse mortgages right now if they're eligible. So, if you're eligible for a reverse mortgage age wise and you have the equity in your property to be able to do a reverse mortgage, it could very well help you through tough times. So, 62 and your assets that you thought you were going to be using for retirement are worth a lot less than you anticipated them to be worth. You could potentially be eligible for a reverse mortgage. My business partner Cheryl Smith is certified in doing reverse mortgages, and we've seen a huge uptick in calls. The problem with reverse mortgages currently are that we can't actually get you the counseling that you need because you have to have face-to-face counseling, and right now there's no face-to-face counseling available.
And
So
that's
that's something.
And that's just not Fairway, that's everybody,
No, that's just a
that's
national
yeah, that's
requirement.
regulation for reverse mortgages, right?
Right. And there's a bill that was put forward a week ago last Thursday. It did not get moved forward, but it is written into a current bill that's around housing right now as part of the COVID-19 changes that we need to make. So
Okay.
that bill is out there. I actually just talked with NeighborWorks, who's one of our local counseling agencies here in Quincy,
Mhm.
and they are watch following that too. So it's something that we're all following. So we are taking reverse mortgage applications, but getting them the counseling that they need is really tough right now.
Right,
Because
and
when
it's
you're in
not
for
gonna
someone that's older,
yeah,
online counseling isn't always the best way to go. They may not like to use anything online.
right.
So
And a lot of times with reverse mortgages, it's helpful to have another family member there with you.
exactly.
That has nothing to do with, the borrower's age. It really has to understand. It has to do with, sometimes people have plans for what they're gonna do with the proceeds of their house, or, I'm
Right.
gonna give Susie the house and Bobby's gonna get the boat, you know? And sometimes it's important for everybody to be on the same page to understand, what the end result of a reverse mortgage could be. Um,
Exactly.
yeah, yeah, but
And
just
reverse mortgages now are so much safer than they were
oh,
15, 20 years ago. It's just a whole different product. And it goes back to what you're talking about all of the other downturns that we've had. Like in my career in 35 years, all of the downturns that we had in the mortgage industry were related to the financing end of things. This is not related to financing. This is related to something beyond our control.
and I think that's
So,
why a lot of people have a really positive outlook about where real
exactly.
estate is gonna be, once we get closer to the end of this. And I've said it a number of different times on my page and to people that I've talked about, everything that I've heard is, housing and all the related services make up 17% of our entire economy. That's a huge piece. So if we're experiencing a temporary problem, not like we've had in the past where it's been, industry issues and lending issues. This is truly a temporary problem. We need to try and keep that in mind. They're making long-term decisions on a temporary, what hopefully is, temporarily and short-lived.
Exactly. Exactly, Helen.
Uh, Next question. Should I look into a line of credit on my home?
So you certainly can look into a line of credit on your home, but if you're having a hard time paying your mortgage right
Mhm.
now, you're not probably in a position to take out a line of credit. If you're in a good position where you're still working and taking out money for necessary expenses is something you want to consider doing, by all means. What's the great thing right now about the economy in the mortgage world or in the
Uh,
finance world is that everybody thinks that mortgage rates have dropped. But in actuality, what is really low right now is the short term lending rate. So that's your equity lines, your credit cards, your car loans. Those are the low interest rates right now that have remained low.
So that
Not
that
that rates are high, but those are
That
the
that
low.
brings up another really good question because I've been running into this over the last couple of weeks. In terms of priority for the lenders and priorities for the banks, where does a credit line fall in the mix of everything?
So in my company, we don't do equity lines or lines of credit, but in a bank, it's usually two different departments nowadays, unless it's a really, really small bank. But even a mid-sized bank, it's usually two different departments. So an equity loan can happen a lot quicker. It's a lot less expensive than a mortgage, but it oftentimes you can't borrow as much money. So
Right.
usually you can only borrow up to about 75% of the value of your home. So if you already have a mortgage out, you have to weigh what that value is going to be. Sometimes they don't do a full blown appraisal, so the amount that they might consider your house worth is less than what you would be able to get if you got a mortgage.
The other day we had, I had a client that said, "Whoa, did I do something wrong? Because my appraised value came in less than what I just bought the house for, like a year or so ago." So we did talk about that, the difference between the appraisal for a refi and the appraisal for a purchase. And it's a lot of people don't understand that, so it can be very confusing.
Yeah, and we're seeing some different things. We'll talk about those on Wednesday night with appraisers now too.
Mhm. Yeah. So here's a good one, and this really just gives me flashbacks to the early 2000s. I can't even tell you. I can't get anyone from my bank on the phone. What should I do?
So you should be able to get someone from your bank, but if they're in the mortgage department or the servicing department, call volume is high.
Mhm.
So what you should do is you should continue to leave messages. You should not assume that you are in forbearance ever until you have actually talked to someone. I strongly suggest that you follow that up with email, that you try to get some kind of confirmation from them that you've had the discussion with them and that you are in forbearance. Ask them how you're going to know that this has been approved,
Mhm.
and ask them for how long it's been approved and if they know what your options will be at the end. Like,
Okay.
ask those questions up front.
Yeah.
So it's very important that they may not be able to answer you on every detail, but they should be able to give you some direction.
Okay. So just in my own experience, and it could be overkill, but again, I keep having these flashbacks to the early 2000s in terms of contacting the banks. So when I was involved with doing modifications and short sales and all of the different things that we ran into back in the early 2000s, I kept a log. I kept a log and said, on April 10th, I called Susie Smith at this number and left her on April 11th, I called this number and this is who I got this time and I left a message. And then I would also follow those up with emails. And sometimes you don't have a direct email to a representative of the individual department, but at
Right.
least you're getting it in and you're getting it documented. So, in the event that you do end up with a problem, it's not a cure-all, it's not anything else. But if you can show that you consistently tried to reach out and you left messages and you sent emails and you worked diligently at this resolution, it can help. It certainly can't hurt. And it's
Document.
yeah, yep. Because I've heard stories, unfortunately, of people sitting on the phone for 2.5 hours in a waiting line. You have to remember, this isn't Massachusetts that it's affecting. This is the whole
Yeah,
country. And if you're with some of the larger lenders, you have people from all over the country calling those same people. They have limited resources. They'll get to you. There's no question that they'll get to you. It's just when, you know?
exactly. It
Yeah,
is. Yeah, I mean, people are on the phone for hours.
yeah.
Have your phone on. If you're using your cell phone, make sure it's plugged in, and just be prepared that you're going to have to wait. If you have if you're using a home phone now, which most people are at home,
Mhm.
um, make sure that it's charged well and that you're going to have enough of a life on that. I would suggest using your cell phone and keeping the speaker on and just be
Go,
prepared to
go,
wait.
cook dinner, do whatever you're going to do, clean the
Right,
house.
right,
Sooner or later, somebody's going to pick up. But it really is important for people to understand. Don't assume anything. You're not going to get it automatically just because you heard the president or somebody speaking on TV. It's not an automatic. You have to request it.
right,
You have to actually speak to somebody. And then you also have a lot of people have the option of logging into their accounts online. So you'll be able to see different notifications, and sometimes emails or messaging comes right through those online
exactly.
portals. So you'll see some acknowledgement that here's a copy of the terms of your forbearance, or here's whatever, once you get through to that point. But please, God, don't stop calling and don't do anything until you speak to somebody.
And you get something in writing, yes.
What do you think, if there's any other words of wisdom you could share with people, what would that be?
I again, Helen, we started with this. We'll talk about this again on Wednesday night, but we did not go into this in a down real estate environment. We went into this with a very strong real estate environment. We went into it with more loans in the pipeline. There's $11 billion worth of loans out there to be financed.
Right.
And I think there was about $2 billion worth of those loans in play being refinanced at the time that we went into this.
Mhm.
Values, I mean, I suspect we may see a little bit of an adjustment on values, but right now, between Cheryl, my business partner, and myself, where properties are appraising out, people are making offers, we're moving forward, closings are happening right now. I think that honestly, maybe you're going to be tired of the house that you lived in. Maybe you realized it was just too much work having to clean it for yourself because it was too big. Maybe it was too small for your family needs, and you're going to need to.
Yeah.
Or maybe you're in the city and you decide, you know what, I don't want to be in the city anymore. I want to be outside the city. So whatever it might be, I think it's going to be a really good time when we come out of this. And don't be afraid now to talk to your real estate professional, because it could be a really good time now. There's a lot of first-time home buyers that are still looking to buy homes.
There certainly are. So just two quick things. So a couple of times we alluded to Wednesday. So on Wednesday, what are we going to talk about on Wednesday?
So we're going to talk a little bit about all that is going on, how the mortgage market is affected by what's going on. And I think it'd be really helpful for people to hear, how does a real estate transaction happen right now? So, how do you do a home inspection? How do you get in to see a house that's listed? Those kind of things. I think we should go back and forth and talk a little bit about that.
Yep.
Tell you how we're doing today. I felt bad. I had a drive-by closing. It was not a nice day outside, but we are doing drive-by closing. So,
And
um,
a lot of the attorneys that have done closings for me recently, and I've got a couple more coming up. They're doing. It sounds crazy. You say drive-by closings. They really are. I mean,
yep,
the clients are sitting in their car signing the documents, and the attorney's there to witness their signatures and notarize it and all that kind of stuff. But it truly is. We're talking about parking lots. I mean, they're doing.
exactly.
I have one attorney who he's got, the front of his office, he's got a bunch of cones set up. So you
Yep.
pull up here, you stop here, he's going to come out in his mask and gloves and his whole thing and hand you your paperwork, you're going to sign it. He then steps back about 10 or 12 feet and he's on his cell phone and he speaks to them and says,
Talking to them. Yep.
page 2, section 3, do you have any questions on that? Do you understand what this means? So he's doing the social distancing by backing up from them and giving them, they can close the window so they don't freeze or get rained on. But those documents can be confusing. There's questions that come up about them.
Right.
So he's there. It's not just sign here, throw it out the window and go through. He's actually stepping back. He's on his cell phone and saying, okay, now you're on page 82.
Right.
And, this is what this means. And I think it's awesome. I really do. I think
just in Massachusetts, we have certain things that have to be wet signed.
right.
So anything that doesn't have to be what we call wet signing, that means really signing with a pen. Some
Yep.
of them can be done electronic. Most of the things that you sign electronically throughout the process, you're seeing again at the closing table.
Yeah.
So,
Yeah. Yeah.
yeah.
So
So we'll talk about that in more detail.
Talk about how our different industries have adapted and changed to these circumstances, and then we've got some questions from buyers and sellers, and I think it's going to be an excellent opportunity for us to talk about those things. So, as an additional resource to people, what we will do is we'll in the comment section or just shortly after this video, we'll put up the lookup sites for your Fannie Mae and Freddie Mac, how to look up your loan, and Maureen, share her contact information.
I have a really great piece. It's what we call a loss mitigation waterfall that as it applies to the forbearance plans that are out there right now. I'd really love to share that if you'd like to post it. So I'll send that over to you.
Absolutely.
Okay.
Thank you, Maureen, and we'll talk again on Wednesday night. Is there anything else you think of?
I can't think of anything else. I think we covered most of just ask. Don't be afraid to reach out to people.
Yeah, it's okay. You're not the only one in this situation.
Everybody's,
there's thousands and hundreds of thousands of people that are asking these same questions and trying to figure out what's best for them in the short term and the longer term. And again, you didn't do anything wrong. It's not you. It's not
right.
There's nothing wrong with it. There's no shame involved in this. You need to figure out what the best way is for you and your family to get through this situation and make sure you come out okay on the other side.
Exactly, Helen.
Thank you, Maureen.
Thank you.
Appreciate it.
Thank you so much. And stay safe, everyone. Take care.